The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome to a beautiful December 12th here at the headquarters of Technical Trading and Investing. It's TFNN.com. I am your host, David White, your faithful servant through snow and, well, I guess there's not much snow in Clearwater, Florida. But if there was snow, I would continue to come here every day and have this hour with you. I'm always grateful for all my listeners. I hope everybody's feeling good today. And, you know, we've got a little bit of movement out here in the marketplace right now. What are we seeing so far today? 2.3 billion shares, so not all that exciting so far. We've got the S&P at 1436, and we'll see how this market plays out. At the moment, we had basically Mr. Bernanke come out and do the full Monty. If you want to get that image out of your head, I guess I put it in there, didn't I? Oh. Anyway, old Bernanke does the full Monty and does a full frontal easing. I guess that would be called it, full frontal easing. I'm going to call it that. So what can we look at out here? And that is, come away with me, if you've got it. So what can we think of about that? It is it pretty much is what it is, but I think it is a definition. In fact, I was listening to some economists talk about gentle Ben, the squeezably soft Ben Bernanke on the dollar, and they all were probably pretty miffed about what he has said in the past compared to what he did today, or at least what a lot of the people did today. And they're going to probably think about it for a while. I think it is admission that we're going to have a first 6 months of the year that is incredibly weak. Can we continue to squeeze a little bit more blood out of this stone with the shorts? I think a few people are going to try. I actually found a stock that was coming in that I like short and added it today. The other ones they're doing okay. I haven't been stopped out on any of my shorts here. We did collect that one nice move of $5 in UA. I've got some others out here that are just struggling to stay positive. So it is a bifurcated market, not all being everything. There are always weak stocks in a market that continues to go up. I just think that this market continues to show weakness, and it is set up for a surprise. Could you get another 5-10 points higher in the S&P? Yeah. Could you also get 100 points lower? Is the 10 points higher 50-50? Yeah. But I think that's a bad bet when you look at the possibility of 50 or 100 points lower. Also being 50-50 this time. It is just one of those things. Anyway, to get to the start of my normal show, since I'm being so rudely interrupted by Ben Bernanke during my show, I think he's trying to cut into my ratings. What do you think? Anyway, at the beginning of the show, I'd like to start off with something. And today it's Ravi Shankar. As a young kid, he made my ears bleed. I've been shot, and I thought I had less pain than listening to his music. Of course, he's a big fan of the Beatles, and probably a dark stain on that time, about the equivalent of disco. Except disco was even more nefarious. It ran on and infected many more people. But Ravi Shankar brought that horrible screech of a cat and a wood chipper, and oh boy, it's just horrific music. And then you think about, of course, he passed away last night. But you think, not everything, everything goes around comes around. And, of course, he had a young daughter. Her name was Norah Jones. I saw her before she became famous, probably maybe 200 yards from here. They had concerts in the park. And I saw her, I think it had to be in 2000, 2001, something like that. I'd rather be caned than listen to any more horrible sitar music, but probably one of the best albums, probably best 5 albums of the decade. And, everything horrible like that sitar music, you never know when it's going to turn out something really good. But anyway, have I beat Ravi Shankar hard enough? I say not. I say the Bataan Death March and Ravi Shankar. I'm trying to put them one above each other. Oh, it was horrible. Just horrible music. In fact, the only thing that gets, okay, I'll put him right below the Bataan Death March, but I'm going to put Yoko Ono one step above it, because that was even worse, and everybody knew it, and they listened to it, and they said nothing. I say, I will never let this travesty stand. Someone has to stand up against it. But anyway, I had to listen to Norah Jones again this morning. Just one of the best albums of all time. Come away with me. Anyway, we'll get on to things that really matter here. Texas is the new Silicon Valley out here. We've talked a little bit about the massive exodus in the last couple of days of people leaving California. 100,000 people last year. Estimates are now for another 150,000 people to leave California. Mostly lack of jobs and huge taxes on the upper crust, let me put it that way. Apple has stopped plans to build their giant spaceship and is moving more and more people. In fact, 2 new building certificates look like they're going to be putting in 200,000 square feet in North Austin, Texas by 2015, plus a second 800,000 square foot building, all in Texas. This was originally all going to be that giant spaceship in California, but I think better heads have prevailed. It is a good 20% cheaper in taxes for employees to be in Austin. Apple took a long look at it and figured out that if we're going to build a place, we're going to want a place that has low taxes for a long time. And it looks like we might see, a smaller and smaller presence for Apple in California and a bigger one in Austin, Texas. So big, in fact, that Apple will probably later this year supplant Dell for the most amount of employees in Austin. And if they continue on this in 2015, maybe be the largest employer in Texas itself. So kind of interesting to see how things change. But we continue to see big movie stars being outed in France for leaving their country. I think the Depardieu, Mr. Perdue. Anyway, he's, boy, I tell you what, the guy's Orson Welles big now. And I don't mean in the movie theater. I mean, the guy is the size of a bus now. Kind of wasn't a bad-looking guy, but now he's let himself go. Anyway, about 4 other people, in fact, some English musicians, I think, what is his name, Blunt, had nice stuff. He's moving to Switzerland. We're seeing huge tax increases and people moving to avoid taxes. So Texas is nothing new. But when you think of Silicon Valley and Apple being a California company, they're going to have at least 3/4, maybe 7/8 of their employees outside of California very soon. Austin may be the new Silicon Valley, along with Dallas. Apple is required under a deal with the commissioners, Texas, to hire no fewer than 3,655 workers on top of the 4,000 employees in Austin now. But looks like they are making huge plans all the way up to 2025. Seems rather large. A long time out there, but not a bad deal probably for Austin, Texas. We're continuing to see strong growth in Florida, Texas, Nevada, anywhere where you can hire somebody, and cost of living is astronomically lower out there. Apple and Microsoft. Apple and Microsoft are telling All Things D that companies are at loggerheads over a 30% commission. Microsoft has made Office for both the Android operating system, its operating system, Windows 8, and Apple's iOS. But if you buy a $10 program from Apple, $3 of that normally goes to Apple. The thought, though, is are you really going to allow that on a $100 product, which is what Microsoft wants to charge for Microsoft Office on a mobile device? And they continue fighting Apple over whether they should give them $30 on a $100 sale. And whether they can negotiate it down on higher priced items. Apparently, from what I read, the product is ready to ship, and Microsoft would like to ship it for both Android and iOS at the exact same time, but continuing to have problems with Apple on whether or not they can put it in their App Store. I wonder if there's a way around it. Maybe Microsoft can find it, but it looks like they've already made a deal with the Google people that are only waiting on Apple to get something out the door. I wonder, what they can do about that. We'll see. Normally, if you listen to Tom O'Brien's show, he talks a lot about his Bloomberg terminal. If you've got $1,500, $1,800, maybe $2,500 a month, you can probably afford a Bloomberg terminal. I don't like the way it puts some things up, but right now Bloomberg and Reuters are probably the two biggest, two biggest outlets for business news, especially about trading news and charts. They're worth in the $25 to $35 billion a year. $35 billion market cap. Bloomberg, the mayor, sold his company a while ago, but what we find is there is one new company that's trying to come in and actually figure out what's going on out there. It is a smaller company, but it reminds me a lot of Google. They are working on doing very complex algorithms on a million of blogs and news sites, and are going to try to consolidate it to give you the kind of power and information that Bloomberg and Reuters gives the market out here. It is started up, but it's starting up with about, let's see if I have it here in this article. I think they started up with $250,000, but not too different from Google. Google started up with its first cash infusion with about $100,000, so not beyond the scope of reason. You might check out, I guess they're supposed to actually start this thing fairly soon as a news service, but Owlin, and I guess they're a bunch of Scandinavian types. Oh, no. Oh, cut me, do I not bleed. Oh, the Ravi Shankar again. Kill me now. We'll be back in a minute. Give me a call, 877-927-6648. And why I kill my engineer and surgically remove my eardrum so I never have to listen to this affront to God again. Anyway.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we come back, we're going to continue with the news. Market's not really moving a lot right now on Sharman Bernanke's discussions, but I don't think it would. I think we're probably close to some kind of blow-off top here in the market. Normally you see some volume in the market, but to me, market's kind of acting a little crashy here. It's a lot of people would think, oh, this is very good, but frankly, I'm scared to death on the long side now. And as long as my shorts continue to perform okay, I'm going to sit on that side of the fence. And it looks like they're not doing too bad. Mostly the shorts I have today are flat or a little down or maybe just a little up, but don't look like I'm going to get stopped out today, which is probably good enough as we go, I think, within about 5 minutes after old Gentle Ben is done. We're going to go right back to the fiscal cliff talks. We'll be right into that, and I don't think that there's much of a chance of getting through that without a stalemate. Verizon and Redbox are officially kicking off a streaming movie service. Redbox is instantly giving Verizon a beta test this month, and I'm probably going to sign up when I get home. I discontinued my Netflix account probably, I don't know, midsummer, early summer when Netflix quit carrying all the DVDs of the documentaries I wanted to see and wanted to force me to watch them in low resolution on their streaming service. But Redbox is coming out with a deal on $6, and it's going to be kind of interesting because not only will you get their streaming service, and they're starting off with about 5,000 movies, but they are also going to be able to let you get up to 4 local Redbox DVDs, including, I think it's $7 or $8 if you want the Blu-rays a month, but you'll be able to pick up 4 movies on DVD, Blu-ray, at your local location for that $9 a month. So that's about $16 on Netflix. I think it's going to be very competitive. And one of these reasons I don't like this business model long term, and that is anybody can hire and start a bunch of servers and start feeding out and streaming movies out there. There's probably a little more magic to getting all that stuff correctly done, but you got Amazon in it, you got Redbox in it now, and Verizon, and it'll probably work really great for me because I've got Verizon Fios service, so there's nobody to yell at when the thing starts hiccuping. It should work absolutely perfectly and be between me and the Verizon network and my Fios service, so it should be very good. But $6 to $9, probably not a bad deal. I think this is going to continue on. It hadn't really hurt Netflix. I think Redbox is up a couple bucks. Netflix is up about $6.50. They're running the shorts once again in that today. And you just want to be very careful that you're not too hanging out too late at the party on Netflix, because I suspect that this could continue to see additional weakness in this market. And I don't care how many Disney movies you get. It's going to be tough for the next 3-4 years for Netflix as more and more competitors come into this market, especially probably a match made in heaven for Redbox with Verizon. As your deals get made with your own ISP, there's very little that they can say. If you say, hey, I'm not getting the kind of download speed I need to watch my movies, you can complain right to the people that are actually putting it all together. Not a bad deal, I think, at least for me, but I'm going to have to check and see what the nice additional movies they have. 5,000 now, probably not a big deal, but maybe they will get more content in the near future. When we look at what the options are doing, and of course this is Weird Wally Wednesday, where the option market makers have gone delta neutral. I look like about 3/4 of that was done by yesterday's close. We're seeing a little bit more of that today. When we look at the SPYs and look at the options in the SPYs, where are they actually pointing to for expiration? What are we on the SPYs right now? 144.5, something like that. We continue to see the options pointing to probably close somewhere around 141, 142 a week from Friday. So we'll continue to look at that, but we're pretty much on the high tail end of about $1.5 billion on the call side, and that's a fairly good indication that we should probably be at the highs for expiration and probably the highs for this year somewhere around today. So we're going to continue to watch that. Take a you can always give me a call at 877-927-6648, 877-927-6648, and if you don't, my engineer says that he will play Yoko Ono music for the rest of the day here at TFNN. So you better pick up that phone.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
We have Yoko Ono playing. I'm going to have to go in there and strangle him if you do not call 877-927-6648. Anyway, let's get back to actual business here. And I had a question in the den. You can also call up and give me a question. Was I saying, was it crashy or thrashy? And to me, I'm calling it more crashy. And the reason why is, we'll get into it a little bit, but I see so many stocks out here that have run maybe a day or two or three on short covering, only to get to previous and above highs and not see the volume come in. And it's been, I could probably go through a week of these if I had time to go back and get these charts, but they're the ones that are scaring me, that make me think that this market is not very stable. And it is these kind of ABCs up. We're getting to previous highs. Yesterday, I think it was Janet that called about CRM. And my warning was if we don't have some continuing nice volume. Yesterday, of course, had more than 4 million shares. We got about 1.4 million shares in Salesforce. today as we go over these highs. I see a lot of that very light volume. We'll have to see and wait probably in the next day or so, but my guess is that we are very close to probably have seen the high in the market probably for the end of this year is my guess right now. In fact, I added another short position to the market, but we got to 1438.59 on as a high for the S&P today, 1434. Any close below 1424 would be a major sell signal in this market, and I am screaming short, Mortimer, short this market because the risk reward is just huge to the downside compared to the upside, and I think the amount of effort that people actually have put into moving this market up about what? 24 points. Yeah, maybe moving the S&P up 24 points on light or no volume, and almost all on short covering. Of course, when you have short covering and you draw down the amount of shorts in the market rather rapidly, as normally as you do in December, you don't have any natural buyers if something giant and a surprise comes out. So I'd be more than willing to see this market probably, maybe trend between 1410 and 1440 between now and the end of the year and remain short, because if a surprise comes out, you're going to have very little support to dive into this market. And when I see so many charts like Salesforce where you get these huge volume surges up to the highs and then nothing happens, it makes me think that we've got a market that is extremely toppy. We'll probably go through a few more of these. We've got Mohammed in Glendale today. How you doing, Mohammed?
Hi, David. Thanks for taking my call.
Thanks, because now I don't have to listen to Yoko Ono anymore. So go ahead.
So, I couldn't agree with you anymore. You got to keep her off the air.
That's we do. We're going to torture you guys if you don't call in. Anyway, what do you want to talk about today?
I was just wondering if Praxair would be considered a short here.
What's the symbol?
PX.
Oh, Praxair. Okay, I just wanted to make sure that we had that correct. No. To me, I'd want some kind of decent signal, and this thing has done nothing but go sideways forever. It's gone sideways before the low. Are you thinking it's going to come down to that $100 untested high volume low?
Right.
That's what you're looking at? It probably would, but that gives you, what, an 8% move in a $100 stock? Is there anything out there better that you might see that has more than an 8% possible move of a test of its previous low out here?
Probably.
Yeah, I'm just thinking that, there is a lot of stuff out there. Have you ever gotten a free trial of my newsletter, the daily one, Path of Least Resistance?
No, I haven't.
Why don't you it's not going to cost you anything if you sign up for it on TFNN right now. You can take a look at it. But I put out charts every morning. And to me, this is one that's moving sideways. And you really don't have anything to hang your hat on here other than it had a nice pullback. What are you trying to set up a little ABC down to that $100 level? Yeah, I can see what you're looking at. I'm just thinking that if you want to risk your money here, there's some stocks where the bottom could actually just fall out. And is it an ABC down? Yes. Is there a high probability of it hitting $100? Yes. So is it a bad trade? No. I'm just thinking that there are stocks out there that have the opportunity to go through here. Let me see if we got, what's today? The 11th? Yesterday was the 11th. Let's take a look at stocks like Maxim Integrated Products. Here's one, and this is what's scaring me in this market, MXIM. It went over its previous high of 5.8 million shares with, what, yesterday? 3 million shares. We're going to have about 1.5 million shares today. To me, those are giving a much better signal out here that these things have topped. We're going to probably go through a few more of these. But to me, there's so many stocks that are actually giving signals that taking a flyer on one that really isn't giving a great signal is a little tougher to see out here. So I would just say you're on the right path, but I think while you could make that play and it would be a decent trade, I think there's so many more out here that are giving signals of topping out on no volume. Again, it's tough to go short this time of year. We probably got, the 12th? Probably have to the 18th where we're going to have action in this market. Of course, you could have any day come out, everybody says we're leaving for Christmas and we're not coming back. And maybe everybody finally assumes that there will be no deal on the fiscal cliff, and maybe people start selling. But to me, I'd rather be on the short side of this market, and there's stocks up here on light or no volume. I'd rather be short those ones with clear indications out here. Other stocks out here that are probably giving one, and we'll get into this a little bit more. We're seeing, let's see if we can find anything else. How about American Tower, AMT? As we look at this one, this thing had a high volume high of 9 million shares on August 1st at $75.62. It's coming to it with 5 million shares, 5 million shares. It's coming into it today, 1.8 million shares so far. So you probably need a little close to pull back to pull the trigger on some of these. But there are a ton of stocks out here testing previous highs on very light volume, and those are the ones I'd be tracking right now.
Got it.
Okay?
Thank you so much.
You bet.
All right.
Okay. Again, the phone calls are the phone board is open, so you can give me a call at 877-927-6648 or and avoid Yoko Ono once again being played. But that's up to you guys. We can do it easy or we can do it hard. He's back at the panel there. Anyway, we're going to go back on. But we'll give them a little opportunity. They may be in shock from listening to Yoko Ono a little bit out there. But we're seeing a lot of stock, or at least I'm seeing these stocks out here. Day's not over, but we are very close to it. There's some stocks out here that are the pattern I like the best right now, at least in being short. This one may need a little bit more. But we see stocks like Zillow, the IPO stock that came out. A lot of people really liked it. Zillow came down on huge, massive volume on, the 6th of November. Is that right? 11/6? Well, I tell you what, time flies, doesn't it? Anyway, this thing got down to about $23. It's back up into that range now. Now, could it get back up to $30 or something? It certainly could, but these are the ones I'm watching at here. This is coming back, trying to fill its gap. I'm going to watch it closely out here. But, if this thing can get back up in the $30 range, maybe next few days, these are the ones I'm going to be tracking because what do we got volume out here today? Less than 300,000 shares. We're in that candle today with that had 7.5 million shares. $29 to $23. Probably not a bad move out there, at least a target. Will it get back to $23? I think probably eventually it will. But just look at that super light volume all the way up here for the last, 12, 15 trading days from that low. There's nothing in here that says that this thing has a huge shine of strength. I would love to, in fact, I added one short that had a big pop today. And I'm thinking that that's probably what you're going to see. A lot of these things are going to have short volume or short covering pops in these things. And it's probably going to be time to set the hook. So you might set an alarm on that one if it can get a little higher. I wouldn't be chasing these in and giving them a lot of room after tonight because we probably either saw the high of the year between now and the first of the year today, most likely. And we're still out there at 1434. Again, if closed below 1424 on the S&P cash would be a decent confirmation, one of about 5 that we've gotten that the market is probably topping out in here. I still think this market is fairly weak. One other thing that gives me pause, especially in the restaurant stocks, is Cisco. I'm not talking about the one that I normally talk about, the networking stock. I'm talking about the stock that actually takes the food to just about everybody on the restaurant chains out here, and that's Sysco, SYSCO. In fact, I got to give my friend Mike a call and see how it's working. But another one of these stocks out here that's just coming in with very light volume into previous highs. Tried to get up to it, didn't quite hit it on November 2nd at 3178. It had 6.1 million shares and couldn't break out. It's attacking the October 2nd high at 3190, 4.1 million shares. And what do we got? 2.9 out here. So not a bad little deal. It broke out on volume, came back, got into that candle on lighter volume. So not a bad pattern out here. What I dislike is that there's not a lot of push as we go through these previous highs out here. Another one that has caught my eye is SBA Communications, SBAC. When we look at this thing, and this is just a handful of the stocks probably over the last week, 10 days, that have been doing this, and a lot of false breakouts. So I continue to be very wary about these stocks. I know there's a lot of short covering, but not a bad time to pull the trigger on these things, especially with the risk reward. But SBA Communications, you've got a 2.5 million share high out here at $68.68 on November 7th. Did you break through it on higher volume? No. Are you going through it today on the very light volume? The answer is yes. And we can go through the rest of the show. But that's what's making me nervous. Another one that makes me nervous out here is Maxim Integrated Products, MXIM. And what do we have in it? Last major high out here at $30 on April 30th had 5.8 million shares. So what do we have the last few days? 3.2 million shares. We got about 1.5 million shares today. Can it hang up here? Can the market just tread water till the end of the year and bore us to death? Yes, but I think that we've got a surprise coming. The VIX is fairly low. It'd be about 1.5 points higher if we didn't have the vacation days in the next 30 days. So what are you going to call it? I'm going to call it about a real VIX with no vacation days would be about 17 right now, somewhere around that neighborhood. And what do we see on this? If you're going to come into these, especially some of these that have been hit a little harder, like the semiconductor group and Maxim, MXIM for that one, just look for these things. If they close below 30, like this one closed below $30 in the next couple of days, you're going to have valid sell signals in this marketplace. MTG, Magic Investment, another one out here. I'm not going to be shorting a $2 stock, but this is the kind of pattern that I've been finding all over the place that's ended in failure, like UA, which we talked about being short in the newsletter this week. These plays are tending to work out a great amount of the time. This one, of course, we're not going to short, but you've got these huge volume days downs. They're coming back. They're coming in to these gap down areas and pretty much filling these gap down areas, but there's very little or if any energy, just a lot of short covering on these stocks as they come down. If we look at UA, I'll go back and look at the same kind of pattern so you can see that. And that is a huge volume days down, and you kind of trend. I took my money just a little early back in the about 49 and something. 49 and change after being short 55. But when you come down on these high volume days, it's not uncommon for them to come up and actually touch it. But we're not seeing a lot of action out of these stocks. If you don't have some short squeeze action going on, they continue to kind of melt back down. This thing's going to go test 48.90 probably here fairly soon. Other stocks that we could get interested in, Martin Marietta Materials. And we'll talk about this when we come back. Give me a call, 877-927-6648, 877-927-6648. We'll see how this day plays out. But still looking 1435 on the S&P. So we're up 7 points. 2.6 billion shares on the consolidated New York Stock Exchange tape so far. Take a look.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
What about it?
No way. No more Yoko Ono. Turn that off. Mitch from Boston is responsible for this affront. No more Yoko Ono allowed on this radio station ever. Stop. No. I said no. Just down, boy, down. So anyway, we're going to look at one more stock here before the end of the day, and that's Brookdale Senior Living Incorporated, BKD. Like I said, I could probably go on and on. We've got a lot of these stocks that are breaking previous highs, very light volume, and don't even stop. Anyway, we've got Brookdale Senior Living, BKD. You had a nice high out here, nice high volume, $25.41 on October 3rd. 5.3 million shares, and we've gotten into it. You had a little volume bounce back up, but a lot of these look toppy. So what do we have yesterday? 1.6 million shares going against 5.3 million shares. Today, what do we have? 300 some odd thousand shares. These. We've come up, and a lot of this is short squeeze. A lot of this, I think, is set up to the options expiration. We're probably going to see a little bit of movement out here. It is not uncommon to see, a 0.5% move up between now and the end of the year just on short covering. So to me, I still think that the risk out there of a surprise in the marketplace trumps any overhead long, at least medium term, let me put this trade. If you're trading intraday, probably not a big deal. If you're in and out of the markets, not a big deal to jump on the short train and have a few of these. If you're talking more than a day trade out here, I'd much rather sit on the short and see this market open up 20, 30 points on the S&P down, which I think is perfectly possible. I'll have to continue thinking about that. I've got actually a little bit more time here, but are we saying short Brookdale Senior or any of these others? I'll leave it up to you. I think that there's better out there that I've seen, and I'm not shorting it. Actually, I found some out here today that are, I think, gapping out of their comfort zone, and likely good shorts here before the end of the day. I had one more spot in my my short roster, and I filled it today on a stock that jumped up rather significantly. But again, it's a lot of times these stocks will continue going higher until everybody gives up shorting them. But I think the risk reward here is fairly decent. We've probably seen the last big move of the year. So could we drift up to 1450? So 15 points higher on the S&P, maybe. I still suspect that we have that thing that no one wants to believe that is going to happen, which is the fiscal cliff. We've got everybody waking up. What is the first trading day of January going to be? The first, second. So come back on Wednesday, the 2nd of January. How long is it going to be before everybody sees that? At least a lot of people sees that 4% the Obamacare tax cut out of their first check. Then we're probably going to see some other people start figuring out whatever happens on the fiscal cliff. I think there's going to be a lot more money sucked out of this marketplace. And right now, my thesis is I'm seeing it in a huge amount of or surplus of at least gasoline. Gasoline is, I think I saw it at 304 this morning and 303 as I drove over here. So we're getting back into the realm of $2, at least $2, high $2 gasoline. I thought maybe it was just a little price war going on, but I'm seeing all over town now it's continuing to go lower. I think that's because of demand going lower, I think. But we'll watch this a little bit longer. You all have a great and safe day. No Yoko Ono.